Hello and welcome to our CT11A DEUTZ session for full year 2024, our results that have just been published. The typical disclaimer that you already know. I would like to start with the results which are in line with the adjusted guidance. We had to adjust the guidance in October 2024. So we've sold less than 150,000 units due to the economic situation. Exactly, it's 142,907 revenue. The guidance said it's around 1.8 billion, and exactly it's 1.814 billion euros. The adjusted EBIT margin is right in the guidance that we have communicated, that it's between 4 to 5%, and the exact EBIT margin, that's 4.2%. Free cash flow is even better than expected. We said that we expect at least balanced free cash flow, and exactly we have figured out that it's 30 million euros. So what do we take away from the year 2024? We have made good progress on our track on the Dual Plus strategy. The diversification of our portfolio and our regions, that worked very well, especially when we talk about service, the Americas and the decentralized energy supply. We have taken effective portfolio measures. We sold Torqeedo and we took over Blue Star Power Systems in the US. And earlier, the Rolls-Royce Power Systems portfolio, the Daimler truck engines, which are now DEUTZ engines. EBIT margin is very solid compared to the past. In previous years, we would only achieve such a margin in very strong years under very strong conditions. So we're growing. Cost reduction on the other side is also in place, and we invest to reach our ambitious 2030 objectives. The Future Fit program, that's our cost reduction efficiency program. This will lead to sustainable savings of 50 million euros from 2026 onwards. We will see already 40% of that, 20 million euros in 2025. So we have very positive effects of our Dual Plus strategy, which are visible in our earnings. That's the optimization of pricing and volume. The prices are stable. We could increase our service level once again. We expect that to go on. And we have undertaken the mentioned portfolio optimization cost measures I've already talked about. And then we have some various effects of that. Once again, the Dual Plus strategy, the classic business where we want to lift the margin and also want to use inorganic growth opportunities. The new named solutions segments, that's energy and new technology, which was formerly known as green. And all these is in new areas where we have the right to win. And then the stable, growing, very profitable service business. That's a plus. As we've made good progress in the classics segment, customers stay with us. They are very happy with our engines and the service side. We took over the Daimler truck engines, the MDEC and the HADEP, and that made it possible to get new customers like Ponce, Class and Bell. I was already talking last time about them. And that's an expansion of our engine portfolio and may help us when we think about rebuilding the Ukraine and thinking about the Ukraine as the corn chamber of Europe. Also, the strategic partnership with TAFE will help us from 2027 on. They will build DEUTZ engines locally in India. I've already mentioned the strong service business. We see continuous growth here. We reached a top line of 512 million euros last year, and we want to reach more than 550 million euros this year in the reach of 600 million euros turnover. So that's very helpful. Highlights in 2024 was the successful integration of Diesel Motor Nordics, now DEUTZ Nordic, and Mario Hochschild in Chile, the acquisition of BWH Fast in Poland, and they also have defense business, small but very viable defense business, and delivering vehicles to the Ukraine. And I already mentioned the Daimler Truck industrial engines, MDEC and HARDEP, where we have started the service activities. So we are setting up a new segment, DEUTZ Solutions. I mentioned that we want to capture value beyond engine and service, focus on tailored new technology offerings, battery electric engines, for example. We are quite optimistic that we will get new customer interest here in 2025. And we expand the energy business. We want to grow it to a revenue of north 400 million euros by 2030. And there's the option to build up further businesses. DEUTZ New Technology is making good progress. We are positioning it for growth. There's a technological focus. We have a clear customer focus. Our CEO, Bert van Hasselt, is in intensive conversations with potential customers, and there's a strong sales pipeline. So 2025 could be the year where we see a commercial breakthrough. With Blue Star Power Systems in the US, we entered the energy business. We have a focus on the genset market in the growing US markets that is driven by the inadequate infrastructure, increasing severe weather events, energy transitions, and the relocation of production to the US. And we see that going on in 2025. We are also thinking about additional growth opportunities in Europe and Asia. And we are also looking at our existing genset business called Magidorz in Morocco. Blue Star Power Systems, that was a convincing case from day one on. It contributes to our earnings, as you can see, and it's far above our initial planning. I mentioned the new reporting, new segments. That's DEUTZ Engines and Service on the one side, and DEUTZ Solutions consisting of energy and new technology on the other side. We are quite optimistic when it comes to our forecast for 2025. Sentiment, both in agriculture and construction, is stabilizing. It's positive. We expect turnaround in the second half of the year, and that will also be backed by the infrastructure program in Germany, the hope for ceasefire in Ukraine, and the defense activities through Europe. We have a positive development in 2025, which we expect. That's our guidance. We expect the revenue to be between 2.1 to 2.3 billion euros. We expect the adjusted EBIT margin to reach 5 to 6%, and we expect the free cash flow to reach mid-double-digit million euro amount. So with that guidance, we confirm our midterm targets for 2028. We want to reach a turnover between 3.2 to 3.4 billion euros. And we feel quite comfortable that we are able to reach that objective. Adjusted EBIT margin shall be between 8 to 9%. And we set a new dividend strategy in place. We want to pay a stable or higher dividend than the previous year. That's an upward trajectory. Here you have the review of all the important numbers for 2024. We had 160th anniversary last year, and there's another anniversary this year. So together with our full year numbers, we celebrated 125 years listed on the stock markets, and we still expect the best to come. Thank you for your interest.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.